The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 17th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free to pick up that phone. Right now is fine. 877-927-6648. Of course, internationally, 727-445-1044. You can always send me an email, steve@tfnn.com, and inside the Tiger's Den. Any ping will do. Let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 253 points. That's 1.25%. Trading out at 20,725. S&P off about 28 points, trading at 2373. The NDX down 88, 1.5%. Russell 2000 down 2%. The semis are off 2 6/10% out there, still above Stevie's red line, I believe, but that should be tested. That's trading out at 1048.70. You've got gold up $20, silver up 16 pennies. The volatility index, spot volatility index, up 26%. So you know what goes along in the playbook there, do you not? So those of you that have not gotten in on the short trade, that would be me. I've been neutral. We got out of our long NDX trade last week, and you're going to have a chance. If this is the beginning of a downtrend, well, then today is a gift, because we're really not that far away from the highs, are we? And now you've got a one-day volatility index spike of plus 26%. Now, I don't know how the market is going to close. I don't know if that's going to get worse. It's going to get better, but it is one of the things that certainly we'll cover this evening in the workshop, the five tools in order to be able to identify market changes and trend out there. So we'll take a look at that. We'll take a look at Light Sweet Crude, which is up 1%, trading up at 49.21. We'll take a look at some individual stocks or whatever you'd like, but you've got Red Robin Gourmet Burgers up 19% or $11. Jack in the Box up 6. SBA Communications up $5. That's 4%. Public Storage up $4, 2%. Puma Biotech up 12%. To the downside, it is Priceline's dollar-wise leading the charge off $22. Google's down 11. SVB Financial's down $10. That's nearly 6%. Goldman Sachs off $10, about 4 4/10% out there. But let's first begin with the markets. Try to figure out what they're doing, or more importantly, where it is that they are headed to. So the very first thing that we talked about here was the spot volatility index. Yeah, a little tongue twister out there, at least for Stevie. That means we're going to go take a look at this chart right here. This chart here shows us the bottom panel, shows us one-day rates of change. You might say, well, what does that mean, one-day rates of change? Very simply, we take a look at yesterday's closing price, and we compare it to today's closing price. Now, we're live here, so you're seeing the blue line here that is going to represent the percentage change on a live basis out here. Again, I don't know where it ends. It is that 4 p.m. level that's going to be the key. But what we can see, other days that are greater than 10%, those are all the blue arrows on my chart here, they either identify a bounce the following session or a bottom. So which will it be? Well, we have to put this together with everything else, and we'll do that throughout the show. But first, let's go out to California and speak with our man, Garo. Garo, thanks for calling. Thanks for holding. How are you doing today?
I'm very good. How about you, Steve?
Very well. Thanks so much for asking. And today you're interested in trading or looking at Apple. So tell us what you're looking at here, what time frame it is that you're looking at, and so that we can follow along with you.
I'm not trading. I'm looking at to buy Apple. I'm just waiting for a pullback from the way that it looks like today. It hit the first dot at the bottom. The dot moved up to the top.
Yes.
Where do you think this is going to stop, and where is the time to get in?
Sure. Okay. So, folks, when Garo's referring to dots, and I've got his specific template up on our screen, the dots that he's referring to are the parabolic SAR system that was popularized by J. Wells Wilder. And in this case here, the simplest explanation at this stage is when you have a dot above price, as we do today, this tells us that the change in trend has occurred, and one maybe should take a look at it from the short side. Now, Garo's looking at this as where the question is, if I'm correct, where is it that Apple is likely to trade to? Where is it potentially going to find support? So, Garo,
yes.
In addition to the tools that you use, so I know that you're looking at the 21-day simple moving average. Right now on my screen, that's priced at 148.32. The other levels that are close to that would be the price point of 147.45. That happens to be so price right now. Here's what we know about this right now in using some market profile data. And this is the daily data that we're using. Apple is still in bullish mode here because it is trading above the top of that box. The top of that box, the specific number is 149.57. In order for Apple to get down to your 21 period simple moving average, we need to see at least a close below it, or maybe price goes ahead and it spikes down into that level and then bounces up. But the buy signal wouldn't be until price were to continue to close above 149.57. Otherwise, the level of support inside of Apple from a daily perspective is going to be 146.39. So between 146.39 and 147.45. Now, 27 million shares have changed hands today. So from a volume perspective, that is the equivalent of, give me one moment here, so I got 27.4 million shares, about 50 million shares for the day, which is going into the trading session of May 8th that had 49 million shares. So volume today is not as is similar to the last upthrust that we had out there. Because Apple is such a large portion of the QQQ series ETF, Garo, you know, me personally, I would be looking for signals in the Qs and signals in the NQ on an intraday basis. And if we were to see that, that's when I would think that Apple might form a bottom out here. But if, in fact, so the other moving average that I believe you like to also look at would be the 50-day. And that's priced at 144.43. But if price were to close below 146.39 and test that 50-day moving average, it's kind of suspect out there. Now, we're about to go to break, so I just shared all that data with you. Would you be kind enough to hang on through this break, and then we'll come back, and I want to get some input from you?
Yes, sir. Yes, sir.
Okay. So we'll go back to Garo in California. We get back from this break. We're taking a look at Apple, which is going to be helpful for you and I to take a look at what's going on inside the NDX 100. Steve Rhodes with TFNN. Be right back. A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Knowing the right move makes all the difference in the world, and on Wednesday, May 17th at 5:30 p.m., I'll share with you the 5 essential patterns for timing the market so that you can make the right moves and become a better trader and investor. A few weeks back, I showed you how to spot a bear market with 2 moves that the market always makes, and on Wednesday, I'll unlock the 5 best moves for timing any market for any time frame. To gain access to this extraordinary 1-hour workshop, test drive my newsletter service, Mastering Probability, for the next 30 days for free. Just visit the homepage at TFNN.com and click on the link, 5 Essential Patterns for Timing the Market. And you'll be able to attend live as well as review this workshop anytime during the next 30 days. I'm looking forward to helping you solve the puzzle of the markets, and I'll see you on Wednesday, May 17th. TFNN.com. We've got your back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're on the line with Garo in California, and his question was, I want to make sure that I clearly answer it, was where is it that I think that Apple will find support? And so, Garo, the area that I'm looking at is between 144 and change and the 146.40 level. Unless I were to see something different on the chart, and by different, I would need right now today to see it close above 153.91. I think we see a further retracement inside of Apple. So that's my price target area where I think Apple would trade to.
Yes. My estimate is 144.65.
Perfect.
And that is the dot. If you see on the April the 24th on your daily chart, April the 24th,
got it.
There's a dot there.
Yes.
You see?
Yes.
Yeah. The value of that dot is 144.65.
Correct.
And if you draw a straight line, at that time when the candle will come down and it will hit that number, it will just touch that 50-day. Because the 50-day is going to expand and that candle is going to lower and lower. The time that candle hits that number, it will just barely touch that 50-day too.
So in the parabolic SAR trading strategy, and folks, where Garo has gone to, and I've never asked you this question before, but he's going to the very last dot of the very last time that the parabolic SAR dots were on top of price. And is that a natural and normal part of the strategy as to when the next occurrence occurs? That's where you look for support?
Yes, sir. Yes, sir.
Okay.
And I don't say 100%. It's not a bulletproof, but 95 to 99%.
Well, Garo, only call me back when you have a 100% deal. I'm just
Yeah, if I find that number, I will be instant billionaire. Yeah.
I love it. Well, that's okay. 100 millionaire is okay. So that is a real part of the strategy, and you use that on each of the time frames that you trade with. Is that correct?
Yes, sir. I mean, that is where it comes. The very last, very bottom dot. That's where is the main support.
Yes.
If it hits there and it reverses, fine. If no, it goes below than that, then I go to the next one, to the next one, the next dot line.
So that'd be what, March 27th? Would that be March 27th, or what is it?
That will be on March the 10th.
You go all the way back. Okay.
It's $141.64.
Okay. Interesting. Okay.
Yeah.
That's great, and thanks for sharing, because you just taught me something that I did not understand with regard to that parabolic SAR system. So it's nice to be able to have that as another tool to use in trying to identify where price might head to. Now, I had mentioned to you another thing that you would want to consider is watching. And today so far is not it. What the QQQ series ETF does is it makes lows on high volume days out here. Sometimes it's not the exact day. Sometimes it's the following day. As an example, on June 24th, when the Qs were moving lower, they did it with 68 million shares. That was a marker. That was an identifier that there was a bottom that was forming inside the Qs. It actually took place. The low was the very following session. If you go back prior to that, you can take a look at February the 8th. And on February the 8th, the Qs moved lower with 91 million shares, and that, in fact, was the bottom of the market out there. And so what I would also be looking at, what you'd like to see occur simultaneously, is a big volume washout and thrust to the downside. That's a signal that the Qs make. In fact, even if we come back into the time period here of November 10th, we saw a volume of about 72 million shares, and it was that day. There's really that day that formed the low. It was tested 2 days later, but in essence, we can say that low that formed on November 10th actually held. Now, today's volume so far, 27 million shares. That says it's only about a 50 million share day. It's really what bulls really want to see is bigger volume today. Now, maybe we get that into the close. I don't know, but that would be another marker that I would be looking at, and to try to look at those two elements along with Apple out there, because I would think the Qs would next form its bottom. Apple also forms its bottom.
Yeah, on Qs, I can see that it is the dot on January, February, March, April the 21st is $132.88.
Yes.
Yeah.
Yes, I see that. I see.
Yeah. That it's going to come there, not necessarily, but the way that I calculate, that's where it's going to come, and that's going to barely touch it's going to go barely below the 50-day by the time that yeah. But all in all,
yes. Go ahead.
What I see that TNA, which is the IWM, is on the upside. So very soon that IWM, I look at TNA, not IWM, is going to curve and it's going to go higher from here. So that will pull even Q with it too.
Sure. So you're calling for a bottom in the TNA, the Russell 2000?
Yes, I think this is very soon it's going to be bottom. It's going to hover maybe 2-3 days, and from there, then I'm going to buy TZA, which is the opposite of that. I'm sorry. The TZA will go down, and TNA will go higher from here.
Right. Okay. Well, everybody heard it here first. Okay, and I'll make sure that they have your address to send you the checks, the royalty checks.
No, this is my evaluation. It's just the evaluation. Let's see what will happen in the future. Yeah.
Well, I'm just trying to help you get to that billionaire phase. Okay.
If I find him, I'll call you and I'll let you know.
Okay, that's great. Hey, thanks so much for calling, Carl. Always good to hear from you.
Sir. Thank you so much.
You bet. That was Garo in California. So before we took that call, we were taking a look at the volatility index. We were taking a look at the mere fact that it's up over 10%. So if you're a futures trader, what I really want you to do is I want you to be able to anticipate a pretty decent bounce. It doesn't mean that the market won't go lower or retest today's lows. And it doesn't work, as Garo said, he's got a tool that doesn't work 100% of the time. Well, guess what? This doesn't work 100% of the time, too. I don't know of any of us that actually have something that works 100% of the time. But as Garo said, his tool works like 95% of the time. I had once done all the tracking on this, historically gone back, and the accuracy on this with regard to a bounce within 48 hours was over 80%, 85%, 86%, something along those lines. So it's a really, really good tool. Otherwise, I wouldn't spend my time discussing it with you. So you want to be able to anticipate that. And what I was saying then was that those who want to go ahead and get in on a short position, you have time, which is pretty nice because we're really not that far from the highs out here. And we'll look for other patterns to identify the low. And if we look at the strong indices, not to just belabor Apple or the QQQ series ETF, but it is important for us to stay here. Do we find a bottom inside the NQ right now? We see a pause, that's for sure, because that TD set of 9 count is inside that 5th and 6th power out here. We'll take a little bit further look. Get back to the break. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome Welcome back, folks. So before we went to that break, we had the NQ chart up here that was saying, hey, pause button was hit, but that was earlier. Here's what we know about the 30-minute chart inside the NQ. It's formed its first A to B equals CD down in quite some time out here. Now, what that equates to is actually a Gartley buy pattern, and it has not confirmed, though. That's the thing. What we know is that on a 30-minute basis, we have a 1 to 2 A to B equals CD to the downside, almost hit right to the tick. The price projection was 56.2175, went just slightly below that. But what we don't have here that this pattern needs, like all patterns needs the market to walk, talk, and squawk. And the way that it does that, it forms a bullish reversal candle. We do not have that. When we don't have that, it says that price can go ahead and continue lower. We did have this TD9 count. That's the first setup in a TD sequential or a potential TD sequential out here. And this did go ahead and form inside bars 5 and 6. That said, okay, pause button. So we will see a pause. We may see a pause for another hour or two. It's possible. But without a bullish reversal signal, which would then require a move above Stevie's red line. And we do not have that. We don't have that in the NQ on a 30-minute basis. That's where we would first see any kind of a turn. We don't have that on a 30-minute basis for the ES, the YM, and I'm looking at it off screen out here, or inside the TF, inside the Russell 2000. So there is no signature out here with regard to playing cards where we get to see the dealer's hand that is suggesting that this is it. We do have that one-day rate of change so that we know what to anticipate either overnight or tomorrow. It might be tomorrow during the trading session out there. So that's not too hard to anticipate and to figure out. But with regard to this, we would have to say that the next thrust really should be to the downside at this stage of the game as of 1:32 in the afternoon. Now, we had a request to go take a look at palladium for Danny in Atlanta. So as we take a look at palladium, we're going to come here and take a look at the 60, the 240, the daily, and the weekly futures contract. We've got the June contract up here. And the question from Danny was, in essence, where is support? And if we take a look at the 60, the 240, and the daily, those are the first three charting screens to the left-hand side. What you will notice is, one, you'll notice that all of the bars are red. That means the price is below the bottom of its market profile for that time frame. That says that it is sellers in control. That then takes us over into the weekly chart. And if we look at the weekly chart, Danny, this says that price to consider where you would cover your short position is either going to be 772.99. You're just trading above it just now. That happens to be the point of control. Or 770. How about that? I'll get out. 756.27. Now, unfortunately for both of us, in order to be able to determine just how important the weekly profile is that we don't have a signal as to whether that box is bearish or bias. And I'm just referring to the structure itself. And the reason we don't have that, because this box is neutral. You can see that the center of the box truly is the center of the box. What we know is that the last time down here, it did find support at the center of the box, 772.99. So we can go with that. If that area fails, then 756.27 becomes the target area. So we don't have anything on a daily, a intraday time frame, and we have to resort to what's going on the weekly. So I hope that that helps you out as well. Let's go take a look at gold. In fact, let's go put gold up here on this set of charts so we can take a look at its 4 market profile time frames. A bit of resistance, just a bit, at 1260.50. That's the top of its 60-minute profile, which has a bullish structure. Says that to anticipate that price will go test that area once more. That's what we should expect out here. 240-minute just says it's all out bullish. Daily right now says it's all out bullish. And weekly has price right at the point of control. So should we expect much price movement inside gold for the next several hours? The answer is probably not. Should we expect a significant pullback? Probably not. If it were to pull back, where would it pull back to? We'd have to go with the price level of 1253.50. You're at 1259. If you were to see a close below 1253.30 out there, then that could, one, it would say we would see more of a retracement, and to where, shoot, it would open up the door into that 1237, 1241, 1234 area. But that's not what it is that we're seeing as we speak right now inside of gold. If we we do the same thing here for silver, not a huge movement today for silver, only up 17 pennies. So gold is doing all of the work out here. In the case of silver, that doesn't mean that silver looks bearish or anything. It's just not, there's just nothing significant as we speak right here. What silver is attempting to do is get up to the 1722 level. Now, if it clears 1722, I mean close above 1722, then silver just gets outright bullish. Why? Because that's the top of its weekly market profile. So that's the price area where it should tag and target. Whether or not it's going to be able to get over that, I don't know. I think that it will. It should, but that becomes the area of resistance for it. Now, what it's all dealing with, and the move that we have seen that has been explosive, and it's hard to believe or fathom, because I know people will go ahead and give the move in gold or the metals as a result of all of the political stuff that took place last night. It's just hard to believe that the Japanese yen move that we are seeing out here is a result of that. And so we do know that the correlation or the price correlations inside of the Japanese yen have a significant impact inside of the metals market. And what we have seen today is just simply a huge move to the downside inside of the Japanese yen. If you take a look at this daily chart out here, it took out support. It took out key support out here by getting below the 112.04, the 111.78 area. So this bodes actually very well for gold out here and silver and for the mining equities, because a significant level of support has failed. And until we see something different, this just simply bodes well. And that covers those metals and that currency pair. Let's take a look at light sweet crude. Let's go ahead and finish this segment off, unless we can get it done in less than a minute out here. Let's go ahead and take a look at light sweet crude on the 60, the 240, and the daily time frame. Our contention has been, still is, that what light sweet crude is attempting to do is get above 49.76 out there. And if it can close above 49.76, then we ought to see price make a run for the 52 area out here. So even with today's price move lower and the so-called directional correlation between light sweet crude and the market, I think light sweet crude still wants to get to 49.76. Now, that is where there are snipers that are sitting out there. So it doesn't necessarily have to go ahead and tag that number. The high today so far has been 49.50. So it's really not that far away. What you and I know for sure is there's a whole group of traders that are trying to suppress price and are ready to sell it. They're comfortable in selling it at that 49.76 area. The reason you and I conclude that is because the center of that box on a daily basis is closer to the top. So the structure of this box is, quite frankly, in the hands of sellers out here. But if that level fails, 49.76, you can expect to run to the 52 area, and that is light sweet crude Texas T. Right now, we got the Dow down 260, S&P off 30, NASDAQ down 94 points. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. One of our dinners asking about the 30-year Treasury, the T-bond out here. As we take a look at it, you and I have discussed over the last couple of days, what is it that Steve-O was looking for? And we had mentioned that we saw the price oscillator, bottom portion of my screen. We're going to go ahead and take a look at that in detail at this evening's workshop so that you can understand how to trade with that. Because the question is, what did I see a few days ago when taking a look at bonds? And my position was time to be neutral at this stage, because what we were looking for as that price oscillator was nearing zero and the pattern that was unfolding was we were going to see Stevie's red line tested. And in fact, that's what has taken place. And the question was, or the answer was to that riddle, was it depends on what price does as it gets into that area. Now, let me just turn off the other two lines so you'll just see Stevie's red line now. So we know that yesterday was a test and it was a rejection. Now today, with a close above it, with conviction, this says we now have a rising price oscillator above zero. Just like Garo talked about having a tool that worked about 95% of the time, just like the volatility index rate of change works about 85% of the time, this works in some high percentage as well. What the message here is that you and I should anticipate higher price in the 30-year Treasury out here. In fact, higher price would really take it back up to the top of its measured move of its consolidation box in the 158 area, or 153 and change right now. But closing above Stevie's red line, 152.17 right now, is very bullish. It says that shorting doesn't make any sense out here, at least with regard to this chart. That then can take us over to taking a look at the 4 different time frame charts out here, the 60, the 240, the daily we've already covered, and then the weekly. You'll see nothing but green shoots, right, as John Logan likes to refer to them, with the exception of the weekly. And the reason why the weekly doesn't have any kind of green shoots as we speak right now, just gray hair out there, is because it has not taken out a market profile. It's been trading with inside the market profile out there. Well, that was an interesting sound. But 154.17 is the price target for the T-bond future. So if you were one that had the trigger and you wanted to go ahead and short it, I would say wait for price to get up into that area. I looked at shorter term charts like 1 minute, 5 minute, 10 minute, 30 minute, and I didn't see anything out there as a price target for the 30-year. So we'll just simply resort back down to the 154 and change level for the 30-year. And if you take that out, then what you contend with is that measured move of the one in the 158 area for the 30-year. The 10-year really doing the same thing as the 30-year. Again, its price oscillator is also above zero. Yesterday you saw a close just above that, and today just a huge wide-ranging bars. With regard to wide-ranging bars, we know what? We know that markets don't end on wide-ranging bars out here, so this is likely to continue higher. That doesn't mean that there's not a retracement or something along those lines overnight or in the morning out here, but this does bode well for yields moving lower and these bonds moving higher out there. So that takes care of that. I did not see any email requests that came in, and we've covered nearly everything out here, I believe. But maybe we didn't cover price targets for the daily equity futures contract. So let's go back and at least do that. And let's go back to that same set of charts, actually, that we have been using, because we can look at these 4 time frames. And let's go take a look at the strong dog out here, the lead dog in the race being the NQ, not to belabor this point. And if we already covered this and I just simply forgot, well, I'll just ask for your understanding. Now, we're going to take a look at the daily first. I think I don't recall if we did. But if we take a look at the daily, the price level to be watching inside the NQ, and Garo, you should be listening to this as well, if the lower prices are going to occur in Apple, what you need to see the daily NQ chart do is close below 56.12. 56.12.15 to be exact. Now, at 56.12, this daily profile has a bullish structure. So even though we've seen other markets get careened, they'll get careened even more, maybe like an orange creamsicle, one of my favorite ice cream flavors as a kid. You'll see a price close below that 56.12 area. Otherwise, what the NQ is doing is moving right down into support. Now, what that does for you and I is if we see that level hold going into the close today, and we have this volatility index with the greater than 10% rate of change out there, it really bodes well for a fairly decent bounce out here. So, and you can start taking a look at retracement levels to understand what that bounce might be. So just simply anticipate that for those of you that are equity futures traders out there. And for those of you that want to get on the wagon, because this could be the beginning of a retracement that lasts through the mid-June time frame. We can't rule that out. We need to see some other levels fail out here. You've got plenty of time to get into the trades on the short side. Now, the daily profile, that's far and away. That's at 54.41. Now, that's the NQ versus taking a look at something like the Russell. So let's go take a look at, Garo was talking about the TNA, which is the triple ETF for the Russell 2000 out here. And as we take a look at its charts, this doesn't look well. It doesn't look well if price closes below 1367.80. Because you see, 1367.80 is the bottom of the weekly profile. And as we take a look at it, and I'm going to go take a look at one more thing, because instead of just looking at the June futures contract, I'm going to go see if these are the same profiles in my Etch-a-Sketch or my Itch-a-Stitch, where I have stitched together all of the futures contracts and created a synthetic product to better emulate what the profiles ought to be. So 1367.80 is actually bad news for the Russell 2000. It says it hasn't found a bottom yet out here. Now, let me go over to my other chart. Let me go find, here is the TF. 1367, I believe 80 was the number. Let me go ahead and turn the profiles on. That was a weekly time frame. So let me do this. Let me do one more, this thing out here. It changes to the weekly. And I just want to see, it's 1345.33. So and here's where there's a difference between the data that gets put out. And having more data is just simply more important out here. Let me turn that off. And there we go. So now we got the red, blue, and green out here. And so really, the number to be targeting, projecting, watching for a potential bottom inside the Russell 2000 futures contract is going to be 1345.33. To me, that is a better number than the one that I just gave to you. Not meaning to simply give you a bad number out here. I think I put those synthetic contracts. So let me see if I did this. If I didn't, I really should have. And let me see. Let me switch over here. Yeah, I did. Okay, good enough. So I'm going to just put, well, the NQ wasn't down. But I'll tell you what. Let's do that for the ES Mini out here. So in the case of the ES Mini, because I think we're down below the daily box, let's go ahead and let that thing populate. Yeah, we are. So the price level here to be looking for inside of the ES Mini, price projection area now is 2352, 2353 really, to 2338. So on a weekly per so, that's the area of where I would target this decline that we see out here. In the case of the ES Mini, if we close above 2382.82 by Friday, shoot. Says we're still going to go higher. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Ben writes in, says, Steve-O, thank you, says, I can't tell whether you're bullish or bearish, and does anything that has occurred over the last 24 hours change your longer-term view out here? So I thought so my position right now, trading-wise, I'm neutral. So I'm neither long nor short. We were long. We closed out that position in the Qs last week. I was anticipating a market that would top on Friday versus last night. can't control the news media, unfortunately. And I don't know that it was really the news media, so I'm not going to go ahead and focus on that per se. And what I am anticipating is we're going to see a bounce. No, I'm not anticipating that we're going to see a bounce between now and the end of the trading session. There's no signals yet. If it shows up, it's a different story. But at this stage here, it hasn't shown up. So that at longer term, the answer is no. I had a conversation just before I went on the air with one of the Tigers out here. And the interesting thing was the first sentence from this Tiger was exactly my sentiment when my head hit the pillow last night. And when we won't talk politics out here, but we do have to talk about the new administration and the reason why the markets are moving higher with regard to the anticipation of repatriation tax, stuff like that. And I said, so what is the absolute worst case here? And then I just had a chuckle, because let's say the absolute worst case here is that the current president gets impeached, right? That's, to me, that's thinking, okay, it's not going to be President Schumer, is it? Who would it be? Yeah, it'd be President Pence out there. And you don't think then that the markets will move higher, that the tax legislation, that the repatriation and all that stuff? So, folks, the answer to that question is long term, what you want to be able to figure out what to do is to buy the next dip. When will that occur? Tonight during the workshop, we'll go ahead and take a look at tools that you can use from that. What I can also share with you is those patterns, and you can go take a look at it on your members page. There's a workshop that I did, 30-minute workshop, how to spot the bear market. And what I can share with you is those patterns are not present. So this is not like this is a major top or anything along those lines. So Ben, at this stage of the game, the answer is nothing has changed from the long term. We are in a market conditions where it's possible that what we see is a retracement going into the third week of June. That would just be the normal pattern out there. So I will reserve my judgment on that call until I see some other things in the market out here. But as we speak right now, it is clearly the sellers who are in control. And I would anticipate and expect that they're going to go ahead and actually push this market even lower going into today's close out there. So I hope that that really answers your question out here. What are we going to talk about for the last minute out here? I don't know. What should we talk about? I don't have any other requests out here. I don't need to make any pleas for you guys to, attend the 5 essential patterns for timing the markets. You already know about that and have heard all of that stuff. So although it's very easy to do, and if you're looking for an extraordinary education of a set of tools that you can apply on any time frame, and I do mean any time frame, stay inside that time frame for whatever instrument it is that you're trading, then this is absolutely a workshop for you, because the education that you get in that 1 hour period of time, for me, it's just really about I've got no interest in wasting your time, and especially my time, which means then I will not waste your time. And it's always about giving you the best of the best. And this is a set of tools that you'll be able to use, pass these down to your kids, whoever it is, improve upon them. That would be a beautiful thing. Well, folks, stay tuned. Your favorite polar bear, my favorite polar bear, David White. He's up next. Wonderful Wednesday means Tom O'Brien from 3 to 5. I'll be back with you at 5:30. Have a great day. Look forward to seeing you tonight. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.